Hello everyone, my name is Moji. You're watching a Bitcoin bubble news channel. At the moment, 90% of my liquid net worth is going to Solana. I took some from ETH. I don't have a lot of Bitcoin at the moment. That doesn't mean I don't like Bitcoin. The other ones seem to go up more. It's that easy. I have a lot of high-end NFTs that I think will bring up another point. Aside from that, I also do some guesswork and other things. But the fun of it, I can see why the time span thing scares everyone though. And I've taken a step back. It's only been 2 weeks since I noticed what's really going on crypto Twitter. This is why the banana zone works and why you get this backlash. It's everyone's hopes and dreams. It's mine, yours, and everyone else's. Okay, they want it to go well so badly, but are afraid it will go wrong. This is the problem that everyone is having. People from the last cycle also have PTSD, just like people from the cycle before. But the last cycle had a blow-off top, and then a crash. This one had a top that was too short, and then fell down. People are now worried about the cycle. Jeff Bezos didn't seem to care about the business cycle. He just got his. In a recent talk show, Raoul, CEO of Real Vision, said that people should pay less attention to current market cycles and more attention to having important cryptocurrencies. Powell said that 90% of his cash net worth is in Solana. He moved his investments from Ethereum to Solana and only holds a small amount of Bitcoin. This choice wasn't made because no one is interested in Bitcoin. Instead, Powell thinks that investments like Solana have a better chance of going up in value. He talked about how the cryptocurrency community is emotionally invested because people are afraid of failing and want to succeed. Powell suggests taking a long-term view similar to Jeff Bezos' approach of holding on no matter what the business cycle is and promoting long-term commitment to investments. CoinDesk reported that buyers jumped at the chance to buy Bitcoin after it dropped sharply after the July 4th holiday. Bitcoin's value dropped more than 10%, from almost $61,000 to less than $54,000 early Friday. As a result, buyers poured money into Bitcoin exchange-traded funds EPS, which led to big inflows of $431 million on Friday, the most in at least 2 weeks. Notably, new deposits of $7.4 million came into Fidelity's Wise Origin Bitcoin Fund, as well as Bitwise Bitcoin ETF, ARK21 Shares Bitcoin ETF, and Van Eek Bitcoin Trust. I don't really trade anything in macro anymore. In terms of my own wealth, it's pretty much all crypto. There are some technology bets and other bits and pieces in global macro investment and Real Vision Pro Macro. They're all part of the same trade. During this process, I learned that everyone in macro had been having a hard time for about 10 years. It was the buy bonds, where diamonds trade. It made a lot of money, but people were having a hard time because they didn't understand the world. Stock prices kept going up, and we couldn't get a handle on anything because we weren't in a funding cycle. After seeing it, you realize that everything was linked to it. It's interesting to ask, okay, well, if it's all the same trade, what's the best performing asset if everything is linked to it? The other really important thing is that I think the Federal Reserve and all the other central banks got rid of left tail risk. It took me too long to understand this, and I'm mad at myself for that. When looking at the world as a whole, left tail risk is really a debt deflation. This is when the value of your collateral drops so much that you can't pay your debts when they're called upon. This causes people to sell their collateral, which starts a circle of debt. In 2008, we had that. What did they do? Devalue the money. What did it do? Make the prices of assets go up, so the collateral went up. 2012 was an even worse year for the Europeans. They said that you can't have a debt decline, which we repeated in COVID. We will not let it happen, and to pay for it, the value of the currency will drop by 8% a year. Imagine that as a put option where you're betting that the system won't blow up. That's a very different way to look at it than saying, I can't believe they're stealing my 8%. You could say, hey, listen, it's the cost of a put option that we all pay 8% for so the system doesn't blow up. If we ignore the left tail and look at this debt refinancing cycle as a whole, they may have to debase the currency over time in order to do it. This could be the best chance in history to take a big risk. To simplify it even more, I split the main assets by the world liquidity, or even the Fed balance sheet. It doesn't matter which measure you use, M2 is only one of them. The NASDAQ and crypto are the only things that go up. Since 2011, the NASDAQ has given back 17% a year, while Bitcoin has given back 150%. You're like, holy crap. Okay, it kind of brings down the value of everything else you buy. Everything stops being ideal. Then some people ask, yeah, but what about the risk return and volatility? It took 380% drops before that 150% return. They are part of that number. That, and the more time you look at it, the less sense it makes. It is a strange type of asset. We've never had something like this before. Thus, I learned too late that there is only one trade, and people don't like it. People don't like that there is only one trade and a new asset class. They want things to go back to how they were. They want to trade oil and the dollar and the yen, and it doesn't matter what they trade. If our job as investors is to either make the most money or keep our money safe, then wealth protection might be slightly less important. But if your goal is to make the most money, then you owe it to yourself to make every trade the best one possible, since there are no benefits to diversification if your goal is to protect your money. Yellen just went to China twice. Why does she need to be in China? It has to do with their debt renewal cycle because they need dollars because their whole real estate market borrows dollars, right? They don't have enough dollars, then. There is a lack of dollars around the world. It began as Silicon Valley Bank, and now it's all part of Credit Suisse. Credit Suisse is a big player in the euro-dollar market. The Japanese banks are the most important part of the euro-dollar business. In other words, they are lacking in money. The dollar-yen starts to go down. After that, Yellen visits China twice. Yellen needs to make this little dance happen. The dance makes fun of Japan to get the Chinese to do something. China doesn't want to lose value. Janet doesn't want to lend money to the Chinese and swap lines directly. She is going to sneak it through the Japanese banks and get the Japanese to step in. That's how I see it going. But the Chinese would have agreed to the other thing because Janet sells more bad bonds than anyone else in the world and needs them to buy bonds. She tells them, I'll get you the flow. We know that the euro-dollar market is short on supplies. We will give you the cash in a number of different ways. Your treasure chests will get bigger. Everyone can leave. Finally, there have been trade deals that try to tell the U.S. that it can't have such a big imbalance. We won't grow enough if everyone doesn't change where they stand. That growth is good for everyone. Every week, a dollar is what makes the world go around. The weak dollar is at the heart of every business boom. Putting money into developing markets is a bad idea. China needs it very much. The United States needs to sell its goods abroad and get people to buy them. Those things won't sell in China. The U.S. needs to lower the interest rate difference and shock the market, maybe in July. I often believe that July or a big signal is on the way, at which point I give the Japanese complete freedom to step in. That's happened 2 or 3 times in almost every run. The Japanese had to step in and fix the exchange market. After that, the dollar drops very quickly. That makes the world grow. Things are much better now. The strong dollar has helped the U.S. In one way, it has lowered inflation. However, it has also hurt exports, which is why they have a big gap. I believe everyone knows what game they need to play. That's the only reason Yellen was in China. There is a magic formula that makes GDP grow. This is very easy to remember, but every economist forgets it somewhere along the way. It's like population growth, economic growth, and debt growth all add up to GDP growth. The future is being stolen by rising debt. In 2008, we blew that up. Service of old bills is now the only thing that adds to debt. More people, more work, more money. You can figure out what will happen in the future based on population growth.